All right, welcome back. I am back on making videos. This video is going to be on order flow and understanding order flow. Now, first of all, what is order flow? Order flow signatures are specific points in price action that helps us figure out which direction the market wants to go towards. What does this mean? It means that by using these signatures, we can figure out that the market is bullish or bearish. How can this help us? It can help us with daily/intraday bias. It can help us determine if price wants to reverse by just reading price action. It can be used as a confirmation. And if these signatures are completely absent, that means we don't want to trade. That means the market is in bad conditions and I don't want to trade. Now, these signatures will become apparent once we get into pictures. Now, let's go over some of these signatures to start. This is going to be a more quick video because this is easy to teach, but you need to practice a lot to understand. Types of order flow signatures. Speed above highs, F for bullish, so we don't want to tap a high and a reverse from it. We want to speed above that. We want to just push through, continue higher. And the same goes for lows. Speed below lows, if we are bearish, you don't want to start creating bullish PD arrays. Disrespecting opposing PD arrays. If we don't want to be respecting or hanging around opposing PD arrays, for example, if we are expecting bullish market conditions on the daily time frame, we don't want to be respecting a bearish daily gap. We just want to push through that and continue lower, nothing else. And fair value gaps staying completely open. BCS stands for best case scenario. So best case scenario in the most extreme bullish or bearish form, they leave the gaps completely open. Or lower 50% not being tapped into F bullish. I don't want to see the 50% of a bullish gap get tapped into if we are very bullish. There's kind of three levels into this. One, it can tap into the lower 50%, but it shouldn't close there. Two, it taps above the 50% and not in the lower one, which is the more premium level in a bullish scenario. It doesn't tap there. It just taps the higher 50% and rushes up from there. And the best case scenario is it doesn't tap it at all. In other words, IOFED or IOFED, whatever you want to call it. Which, what is IOFED? It is when in a, for example, bullish scenario, we tap a bullish gap by a very little amount and then speed up from there. That is the absolute best case scenario. And it is a very strong signature that price wants to go and continue being bullish. So, an example here. Look on the right side, how bullish the market is. We have our targets on the left. We have these lines. Now, I'm not showing one of them, but there's also another high that we are targeting. And we want to reverse back up into those. Look at what price does. So we start, actually I can't get the pen in a second. So pay attention to this gap here. Very small gaps, but a gap is a gap. And we also have another one here at the top. We speed through these with this candle. That creates another gap. This gap completely stays open completely. Another gap right here between these two candles stays completely open. It stays untouched. Another small gap there stays completely open. Little retracement here into this one. But as soon as we tap into this, price accelerates without going back for any more gaps into the highs. This is a strong signature that, okay, price is bullish. Now you may be wondering, how do you enter in these scenarios? Well, there are multiple ways to enter, right? For one, you can enter off of this break here now, right here. Price breaks it, taps back into the level, goes back up. I usually use the wick right around there for the entry, not the body. That's fine for me, because in these scenarios, price is very persistent on going up. So a lot of times you might not get the body, or you might not even get an entry at all. You can just buy when the candle closes, or wait for potential retracement into the wick for the body. Or after this candle was made, we can see we displaced these. This is a lower, it's a higher risk entry, lower probable entry, but after this candle was closed, you could have entered right there. Now, obviously, if you go into more depth on this price action, a lot of things become clear, such as, oh, a 9:30 open was down here, so it's probably not a bad idea to enter here, considering we want to go up there, or that we also took the low on the left, whatever. We don't care about that. We just want to understand signatures of order flow. Let's go into another example. All right, another example. You can see I've marked a level here, which in this case was previous day's highs. But look to the left. A little choppy price action, but then eventually gap stays open, small gap stays open, little retracement here, no body close in the candle at all. We close above the candle, eventually tapping into there. But pay attention to this part of the price action. Do you see how price is kind of weakening? It's going to the target very slowly. It was extremely bullish here. Followed all of the signatures for bullish order flow, but suddenly it slows down here. Sorry, my mic fell off. Give me a second. Suddenly it slows down here. We tap into the high. We just place this low. So speed below lows. First a confirmation. Let me get rid of this. Speed below lows. We close below this low. We retrace a bit. It's fine. This is not enough confirmation for me to get in a short. We respect this order block here. Again, speed below lows right there. We tap into this fair value gap. Higher 50% gets tapped, but what makes this a good confirmation is that both times when it was tapped, look at where the body's closed. Below the gap, not even in the gap, completely below the gap. So that makes it extremely bullish, right? And then price continues lower. Now, this is not meant to be perfect, but for example, here we retrace into this mini gap. We leave this gap open here. We don't even create any gaps here. We just completely go lower. But do you see how by understanding that we don't see any more signatures of bullishness, we could anticipate a reversal here. Price weakens around our point of interest. and then we suddenly get speed below lows twice. Speed below lows. Another low here, we speed through it. Another low here, we speed through it. We don't want to see price take a low. If I can draw, we don't want to see price take a low and then start displacing. We want to see speed below it. Let's go to the next example. Now, what signatures of order flow do you see here? I'm going to give you a few seconds. Pretty much none. Sure, you could say down here we were bullish. That's pretty much what else do you see afterwards? A lot of going back and forth, right? A lot of going back and forth. Now, can you take trades in this environment? Technically, yes. Will it get you to your point of interest or take profit? Technically, yes. But also, it is extremely stressful, right? Back and forth. It's just back and forth. It is just back and forth. These environments are when the signatures that we talked about are missing. This gap gets tapped into, this one gets tapped into, but then we also go back and we tap into it again. We take this high, we take this low, but then we also go back above and take this high. We don't take this low, we don't have any speed, it becomes bullish here, we get an eye of fat there, it's just back and forth. Once again, you can trade in these environments, but it is extremely stressful and it's just not worth it. Now I'm going to go on live charts and show you an example of a trade that I took using these signatures. All right, we have the executions right here. Paper trading, yes, it was paper trade, but it was, regardless of that, a valid trade. And I would rather delve into something that I have executions on than something I don't. So, what did we see? Let's analyze this price action in its entirety. We have a sweep up there. If we zoom in, we have this gap. This gap stays completely open and we speed through these lows. Not enough confirmation. Let's see. Once again, look at this. We tapped the 50%, closed below the gap. On our way to this low, which was my take profit, on our way to this low, gap stays open. We go down here, candle closes, next candle takes it. 1D 1 hour, let's see what this looks like. This is an older trade of mine, but it is perfect to analyze this. 1 hour gap. We do not even tap the higher 50%. We tap the lower part into this order block level here. After sweeping there, what else do we have? Let's go on the 5 minutes. So on the 5 minutes, there's a lot more you can see. I'll get rid of everything here. So this gap is staying completely open. This gap is staying completely open. This gap right here gives us a micro tap into an accumulation. Now, this environment you don't want to trade in, but considering how bearish we were here, and that we have swept this high right here and displaced lower, displacing below all of this accumulation, we can understand that, okay, high to the low. Our next targets could be this low and this low. Now I just took TPs at the closest one after I saw 1 minute displacement. But we can see these gaps are staying completely open. This guy barely tapped into, this place is lower. Starts accumulating, back into the gap, sweeping this high into right there to be lower. Now, let's look at the 1 minute. Now, we are on the 1 minute. In a bullish scenario, when we take these highs here, we should speed above, but look at what we see here. We sweep it, we have this bullish value gap right here. We disrespect it completely ignoring the existence of this. Okay, and I enter my short right there, this candle, after we displace this. We don't even tap into this gap if we don't care about this gap. This low, we take it, next candle, this place is lower. Next, taps into this gap right here. Does it reach into the upper 50%? It does not. Continues lower. This gap here stays open. This one, it does trade into the higher 50%, but that is fine. It taps, look at where it closes. Down here. Very bearish. Next one, once again, closes below. Continues lower. We get our first sign that the signature is changing, that the market order flow is changing here. We don't have a lot of speed when we're almost there. But you were traced into this order block. My stop loss was trailed up here. Move lower. Takes the low. Now, pay attention to what price action does here. No speed below this. Until here you're thinking, okay, it is still bearish. And then we get this. That's completely fine. Maybe it wants to sweep an internal high to continue lower. This candle here gets respected as an order block. Back up. And here I exit. Once again here, we respect this. A little choppy. And then we get a move up. Once again, you can see signs of bullishness here, right? This gap stays completely open. This huge gap gets barely tapped into right there. IO Fed, whatever you want to call it. We take this high. Once again, after we take this high, look at what the market starts doing, chopping around, until we get somewhat of a clear direction that it wants to go lower. And then there's really nothing in here to trade, right? This is as clean as it gets, and it can help you read price action super easily. That's pretty much it. I hope this helped, and I'll see you in the next one.